Hi, everyone. Welcome to today's session. Today we're hosting Brenda Wangari. She'll be taking us through founder funding readiness. And I'd like to request us to, if you can, turn on your videos. Brenda will be doing a presentation. Then after the presentation, she'll give us an exercise, and we'll go into breakout rooms. And then we'll wrap up the session. So I'll let Brenda take over. I'll be sharing a slide here. Brenda, welcome.
Thank you, Matu. Good afternoon, good evening, good whatever time it is, wherever you guys are. I'm seeing a couple of familiar names. We're going to be in familiar territory. I'm suffering from a small flu. We've been renovating where I am, so I will switch on my videos that you see I'm a real person. But other than that, I'd like to keep my video off.
Okay.
But yeah, welcome to today's session. I hope the rest of the sessions have gone on well. Yeah, so for our session today, it's all about startup fundraising. And Matu, are we waiting for anyone or did I just get started?
No, we can get started.
Okay, cool. So I think maybe before I get started, I'd like to get familiar with who is in the room. Are you a builder? Are you a founder? Feel free to unmute and briefly introduce yourself or drop it in the chat.
Yeah, Collins, you want to go first? You can unmute.
Sorry, I didn't hear. I was on another call. So.
Yes, so we do a brief round of introductions, who you are, what you're building.
Okay. So my name is Collins. I think we met last time. We are building BPesa. BPesa is basically a decentralized digital payments platform that delivers near zero fees. We handle cross-currency payments, but our main selling point is we're empowering agents, both physical agents, to be able to earn more through yield-backed float and optimized commissions. Yeah. Thank you.
Thank you, Collins. Good to see you. Karibu. Cool. Who else is on the call?
Dennis Kimadi.
Yes. Hello, everyone. Dennis over here. I'm working on a project called Expenly. Ideally, it's supposed to be a financial management tool for crypto natives. If you wanna have control of your finances, it's a tool to easily help you handle track your expenses, do savings, investments, pretty much an all-in-one app to manage your finances. Yep. Thank you.
Cool. Thank you, Dennis. Welcome to the session. Who's next?
Elias.
Hi everyone, my name is Elias Kadesha. I'm studying to be a cybersecurity analyst specialist at Africa Hackon. I'm not literally a web developer, but I love engaging with people who have developed apps since my niche in the end of cybersecurity is knowing how an application works and knowing where an attack can be able to come from from a specific application. So if I get the basics on how people are able to develop apps and everything, I believe I'll be good to go on my end. So yeah.
Thank you, Elias. Stan?
Thank you, Matu. Thank you. I'm Stan. Basically, building on Web3, not yet with any product working on at the moment, but working on mostly DADs and verifiable credentials. And yeah, looking forward to that part of being a founder and how to raise funds. Is it through fundraising? Is it through bootstrapping? And yeah, basically that's why I'm here to learn and engage. Thank you.
Thank you, Stan. Pablo?
Hi everyone, my name is Pablo. Sorry, I'm on the road again. Co-founder and CTO of CarbonSeek, and for this particular sprint of the Node program, we're pushing a travel tech platform that allows people to basically book flight, accommodation, and transfers within one click and be able to pay through payment rails. We're also going to offer travel insurance through the blockchain, and yeah, it's great to be here. Thank you.
Thank you, Pablo. Then we have Mugambi. Mugambi, you want to say hi?
Hi, hello, I'm Mugambi. Um, I'm an all-round creative, both audio and visual, and I'm so jazzed to be here. I can take this session too.
So Brenda, so the guys were here. A good number of them are not tuned into the session today, but we'll share with them this recording. Also, they will be reaching out for the one-on-ones, but feel free to launch.
Awesome. Thank you, Matu. Awesome. Thank you guys for the intros. It's good to know who's in the room. So for today's session, I'm excited to dive into one of the most critical topics for any founder looking to secure capital. And, this could be whether you want to chase like an early grant, an angel check, or even like do a VC round. The rules have changed. Today, we're going to cover all that, what it means to be investor ready, and what practical steps you can take now. Mato, could you help me with the slides? Awesome. Let's present.
Can you see the slides?
Yes. But could you do full screen?
Oh, it's not full screen.
Yeah.
Is it now?
Give me a second. Yeah.
Okay.
Cool. So let's dive right into it. So it's good to know that, there's a mix of people building tech startups, there's people looking to build tech startups, who are also really building. So it's a nice mix. So I will try share as much knowledge and wisdom that I've gathered over the years. For those we've met, hi. For those we have not met before, my name is Brenda, and I've spent the last 10 years building different things in the tech ecosystem. I've worked with tech startups, accelerators, a VC fund, family offices, like, yeah, you name it. And those people in the ecosystem, our role, we call it being an ecosystem builder, because you sort of like do bits of things with everyone in the ecosystem. So I'm happy to guide you through this session. And yeah, so by the end of our time together, I'd like us to achieve the following things. Next slide. Yeah. So one thing I'd like you to understand is how you can raise grants and if an investment effectively, and also learn what makes a startup investor ready today. And then we'll also have a chance, as Matu shared, to practice this practically. So you'll be paired with someone on the call to have a short conversation. But before we jump into it, a few things that sort of clarify before we jump into the conversation. So when it comes to the funding landscape, when I'm speaking about grants, I'm speaking about non-dilutive capital, and this is typically from foundations, government, nonprofits. If I'm speaking about accelerators, these are usually programs that would provide you with mentorship, and some might ask for small equity in return. We also have angels, who are people who would usually write you a very early check. So we call them early believers, and a lot of them come with very important and strategic networks that could be useful for your startups. And then the last thing here is venture capital. And when I'm talking about venture capital here, I'm talking about high growth, institutional scaling type of company and funding. I think the most important thing to understand here is with grants is they're non-dilutive, and a lot of the time they are focused a lot on impact. And this would be great for you, especially if you're looking to fund a lot of research and development of your project or your product. And then look for equity, which is more dilutive when you want to trade a bit of ownership for some capital to scale your business. Cool. So let's next slide, please. I'd like us to take a bit of time to focus on what the current market conditions are. So this is a snapshot of the startup funding space in Africa as of the first half of this year. And this was developed by the Big Deal. You can check them out. So in terms of transaction volumes, so for the first half of the year, African startups are able to raise approximately $1.4 billion. I think that's a pretty impressive number. But then if you look at the split between equity and debt, we see there's 67% of this funding that was equity, and then 28% was debt. And then if you are to dive down deeper into sort of three clusters of startups, as you can see in the bottom left of your screen, we have people who raised over 100K checks, over 1 million checks, over 10 million checks. And you can see the numbers there on your screen. So I'd urge you to think about your startup, are you trying to be in the, 100K bucket? Are you trying to be a $1 million bucket, or are you trying to be in $10 million bucket? That's your choice. But then moving on to the middle part of this graph, we see here that 78% of this funding went to startups that were in the big four. And when you talk about the big four, what countries are we talking about here? So we have South Africa, Egypt, Kenya, and Nigeria. This is a trend that has been there in the ecosystem consistently, I'd say, for the past 5 to 7 years. Yeah, those four countries consistently raise the highest amount of tech dollars when it comes to fundraising on the continent. They're all very different ecosystems. I don't know if anyone here on the call has been to South Africa, Egypt, or even Nigeria. They are all very interesting, complex ecosystems that are unique in their own ways. And if you look at this numbers, it can give you an idea of why. But then if you were to look down further into that in terms of sectors, 45% of this funding went into fintech startups, while 21% went into clean tech startups. And then you can see a breakdown of the other sectors there in the middle. So we have energy and water, 20%, health tech at 11%, and then we have logistics and transport at 8%. I think something else that's interesting to highlight is the disparity between male and female-led and enterprises on the continent. So you can see there out of all the companies that raised, that at least 1.5% of them had a female CEO. I think that's a very, 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 very low number. So this translates into 9% of the companies having at least one female co-founder. So if you've not yet built a company, and you want to make an impact on the continent, go look for females to collaborate with. Then in terms of investors, there's this number here, 330 plus. I think that's a very interesting numbers because if you think about the amount of capital that either the founders who on call especially are trying to raise, there's 330 plus investors who at least signed a 100K check. So if you have started fundraising and you have your spreadsheet, does it have this 330 people at least, targeted for them to write your check? But I think for me, the most interesting thing in this graphic is the box at the bottom right of the screen, which, the transaction value is big. When you look at it, it's 1.5 billion US dollars. But then if you are to zoom out and look at that globally, then African startups, just raise 0.4% of, the funding that is available. So where did the other, what's the figure there? 99.6% go? Yeah, so I just know the pie is big and it's exciting. I'm going to pause there and see first if there's any reactions or questions to this graphic on the screen. Does anything stand out to anyone here? Any figure that's interesting, shocking? No? Anyone?
I was
Collins.
shy.
Oh, okay,
Yeah.
cool. Stan has volunteered. Hi, Stan.
Hi, Brenda. Thank you. I think basically my take would be correct me if I'm wrong, guys, in the call. I know we are diverse, but I thought Africa was the most active guys in raising seed capital, all that. Because if you guys are into, let's say, newsletters and stuff, you'll agree with me that Africa is, some on them up. Then Brenda, there you're sharing that we are doing 0.4%. Oh, sorry. I don't know if the math ain't one thing, but that's my take on it, Brenda.
Yeah, I mean, I think the takeaway here should be that there is a lot of startup funding that is available, either for you as a startup in Africa or a startup globally. Because if we look at this number, for us, it's impressive, we're like $1.4 billion. Wow. But then if you have to compare that with what is happening globally, then that's what you see, it's just a small percentage. Meaning there's a lot more action that is happening out there that needs to also happen in here. Yeah, Collins.
Yeah, I think still to add on what Stan was saying, I think you've mentioned the 0.4. I mean, I'd like to know what are we not doing because 0.4 of the total global equity, I think that's it's a small figure. So is it something we're not doing as startups in Africa, or is it just a global phenomena?
That's a great question. I'll let Steve speak and then you can wrap up. Yes, Steve.
Yes. Thank you, Brenda. Mine comes to the aspect of 21% went into climate tech startups, followed, of course, by fintech. I think is also a point for African founders. Should not all just focus on fintech. I think climate tech seems to have huge potential. And it will be great to see what startups are able to do within that space. It's not a question, it's a remark.
Yeah, I like that remark in that direction. But yeah, I mean, like the African startup ecosystem is what I'd say young and growing. If we were to look at, even an example of Kenya, what would you say is like, the most like mature startup? A lot of people might say M-Pesa. It's not really a startup, but you know, or Safaricom, when you talk about tech companies. Like we cannot compare with, places where when you're talking about tech companies, you're talking about PayPal, you're talking about what's this company that acquired PayPal, that acquired Paystack? I forget the name. But there's a lot more things happening. This is just a snapshot. So I think, as Steve mentioned, there's also a lot of opportunity. I think when a lot of people are thinking about building businesses, a lot of people will, especially in the Web3 space, will automatically go towards fintech. But you can see there's also opportunities in the other sectors. Okay, cool. Awesome. So I think market conditions change, so it's good to always follow publications like Africa the Big Deal. Look them up. They're active on socials, and you can just look at the data that they share publicly to just stay informed as you're building your business on what the trends are in different things. Cool. So I'd like us to go into demystifying different capital types. Next slide. Thank you. And there's a lot of different types of capital available out there, but for this session, I'd like to focus on these three. So one is grants. As I briefly mentioned, these are non-dilutive, meaning you don't have to give up any share of your business to receive this capital. But what they cost you, they'll cost you in time. They usually, will demand for impact or for you to achieve very specific milestones. And grants are good for you to consider, especially to validate your early technology and also to just fund any public-facing goods that you'd like to make. Then the other type of capital is equity. And with equity here is where we see funders taking an ownership stake. And, if you're to think of it, this is usually the high risk, high reward type of capital. So this is where where venture capital would fall under. And this is, good to look at when you need to scale. But remember, this requires you giving up some ownership of your business. And different investors have different return expectations. But I figure you can work with just as you look at different options out there is, can you give at least a return of 10x on whatever equity investment you get? Then that type of capital here is debt. So think of this as borrowed money. So this is good for mature companies when your revenues are predictable. And you need capital, for like a short bridge or to purchase an asset. But what you need to think about here is debt comes with repayment obligations. And this is whether your business is successful or not. So usually even when a company closes down, like when a tech startup closes down, a lot of documentation that I've come across is debt funders get their capital back. So, whether your business is successful or not, your debt funders will get paid at the end of the day. Or even if there is liquidation to be done, they're usually the first ones to be paid off. So I think as we go out with the session, just have in mind that choosing the wrong capital source and also choosing it at the wrong time is not good for your business. So you always have to make sure that the type of capital that you're looking for is aligning with the type of business and actually where your business is at. Yeah, and I know might be thinking that investors want to know very many things, but I think if you were to think about what investors really want to know, next slide. I think we can break it down into like these 3 points. So the first thing is utility over hype. So we're all building technology. Like a lot of the time, founders like to focus on like the novelty or the newness of the technology, which at the end of the day is less important than its function. So what you should really ask yourself is your product still solving a painful problem? And if you're to remove the technology from the business, would it still be valuable? So always aim to, build for something that people need, as opposed to whatever is being hyped. Then the other thing you need to know as you deal with investors is compliance. And when I say compliance here, it's just about like the regulatory environment. It's maturing rapidly. I'm sure I think majority of the people on the call would be Kenyan, so I'll make that assumption. But I'm sure you've seen all the different bills that are coming out on like just different things in the tech space. So, you need to make sure that you're keeping up fast with that. But also, if you're building a solid business, you need to have a solid legal structure. So where are you incorporated? And if you're building something that needs compliance, like do you have the certifications? And now when you're dealing with investors, this used to be something that was not a prerequisite, but I'll tell you for free, it is. Then the other thing is a market focus here. And with market focus, investors want to see that you're targeting a large market, a market that is addressable, and especially in spaces where you say that your product or your business is solving like critical gaps. So it needs to be visible. So don't go around saying that you're doing 1,000,001 things for 1,000,001 people. Don't try boil the ocean. Focus. So you've met a couple of investors, you've decided on the type of capital you want, and you have an idea of what your investors want to know. I think this would be a good time to see how you as a founder can define what journey your company is going to take, and how ready are you for the different elements of growth. So I know last time I introduced you to the viral framework. I'd like to introduce you to a new framework this time. Next slide. And this framework is called the POEM, POAEM framework, and it's developed by Tommy Davis. How many of us know Tommy Davis on the call? Anyone? Okay, if you don't. Tommy Davis is he's he's the OG of angel investment on the continent. And one of the things he is really lauded for is just helping bring a lot of clarity on what a startup versus an SME is. So as you build your businesses, you'll hear the term SME built a lot, being thrown around a lot. And you might be wondering, am I building an SME or am I building a startup? I'm sure if you've been in government corridors, you hear the term SME a lot. So that main distinction, with the two is SMEs aim for, sustainability and profit, and a lot of the times are, funded by debt or cash flow. Think kiosk. So, there's customers every day. You might have 1, 2 employees, so they don't grow very, very big. And on the other end, we have startups. And startups, a lot of the time are building technology that is rapidly evolving, and the aim really is to get as many people to try on the technology, which means that, a founder always needs to think about scaling. And then if you have funders who've come on board, you need to think about how you exit them from the business. So fundamentally, he's one of the people who've been lauded with, helping just demystify the two. And as your business is growing, you'll always be thinking like you need to balance risk. So there's a risk of, your current business, which is you have immediate customer needs that you need to deliver on. And then there's also the venture risk, which is you're building for the future. So how do you navigate, or how do you find balance between those? So that's what Tommy came up with. So the PM poem is for proposition. So as a founder, is a value you're delivering clear, and is it also compelling? O is for organization. So this is all about like having the right team and a solid governance structure. And we have E for economics. This is all about like, is your business model viable? Do the unit economics make sense? Then M is for milestones. So every time that, you fundraise, so like for this program, there's a prize available. And the person who will get that will need to create like, a 6-month plan. So, when you create a plan like that, do you deliver on promises that you make like that? So you'll need to provide evidence of, past milestones that you might have delivered on, have evidence that shows progress on what you're building. But yeah, I think the goal as a founder should just to have like a very compelling answer to like every letter here. So, he also has a book. It's called Investment Worthy Startup. You guys can check it out. I think it's on Amazon. But also look him up on LinkedIn. He's always sharing gems. Cool. So I'll quickly go through the other because I'm seeing like, time has gone. So as you fundraise for your grants, what are the things that you need to keep in mind with funders? So one, alignment is key. Make sure that your project aligns with what the funder is doing, whether it's their mission, but just don't think about profit there. And then also think about deliverables. So grants are all about execution. What can you commit to in like a 90-day deliverables plan? And you have to come up with milestones that are tangible. So things, I think we covered this a bit in the last session. So things like, launch an MVP, achieve 100 active users. So like you have to set like very, very concrete goals. I think you guys are familiar with like that goal setting, popular goal setting acronym SMART. So just have that in mind. And then the other thing would be, community engagement. Funders value a lot of commitment to the ecosystem. So are you an active contributor to like this ecosystem that you want to support? So always before you ask for money, make sure you're an active contributor. Don't be a passive. So that's with grants. And then when things start getting serious, next slide. Then you've had a conversation, especially with institutional funders. Then you get to the DD phase. So DD phase is what we call due diligence. This is where they want to do more investigation on what your business is all about. So I think we can put this in 4 main buckets. Think about like your corporate and legal staff. Check your cap table, make sure it's updated. Look at all your IP. Is it assigned to the correct company? Like if this process gets messy, especially with paperwork, like it kills the deal. Nobody wants to do with paperwork that's not well arranged. The other bucket to think about is the financial health of your business. Investors will look at your unit economics. So, you have to think about like the lifetime value of your customers versus the customer acquisition costs. Like they want to see that scaling a business won't bankrupt you. So there's a lot of like projections that will be done there. Then the other bucket is like, traction data. So think about like, stuff like, customer testimonials or even letters of intent from people who want to partner with your company or your business. And then the last bucket would be like compliance and tech. So, they will want to check about like, data privacy compliance. If you say you're building on a specific tech stack, is it reliable? Yeah, so you must prove that, you can scale whatever technology you're building securely. So, this is when you'd want to think about like, has like a security analyst tested your system, especially if you're dealing with sensitive information. Cool. And then last but not least is a pitch deck. So I know most of you here have already know what a pitch deck is, but a good pitch deck follows a logical story. So I think if you can look at it like start with a setup and then go to execution. So with setup, is where you clearly define the problem that you're solving, the problem that you've seen, what is your solution, followed by what you'd call like a quick demo. And then now the rest of the session would be like, this is where you prove that you can actually deliver. So this is where you focus on your metrics, your business model, and the unique capabilities of your team. And I think here something to just emphasize is just like, guys, the team slide is crucial. Like you need to look at it as like, where the people that you put on there, like very critical in pulling that off. So yeah, I don't think I have anything else to add there. But as you engage investors, a couple of tips to build investor confidence. Next slide. One is, ship consistently, show progress, not promises, give product updates, both to, your customers, but also to your investors. A good tip I usually tell founders, start with grants. Like, you need to de-risk your business before, like, the high stake equity money comes in. So look for grants. There's so many grants out there. Look for them and apply. Then also be audit ready, like treat your documents and your financials professionally from the very start. Like, if you want to build a business that is going to attract outside capital, people will come and ask questions and they want to know why, things are done the way they are. So, if you have company policies, document them, and things like those. And then I think the last tip I give you here is just to practice transparency. Building a business is not easy, but don't hide the challenges. A lot of the time, investors are betting on you to solve problems. So being honest about something that is risky is actually a sign of maturity. Oh, so I know I have spoken a lot. I will pause there and I will take us to our group activity. But maybe before that, are there any questions? Okay, cool. If you have any question, feel free to unmute or just drop it in the chat. Matu, for this next session, I'd like us to do a group activity where we'll have the founders as investors. We'll just simulate like what a check writing situation usually looks like. So what we'll do is we'll have everyone in the group. I think how many we are 11 or 10?
We're about 10 of us.
But wait, it's a mix. How many founders are here? 1, 2.
Collins, Crickson, Dennis, Fatuma, and Steve and Pablo. So we're not even 10.
Okay. I think let's how do we do this? So how many companies, sorry?
We have Collins and Steve from one company, Pablo from a second company, Fatuma third, Dennis fourth, Crickson fifth. So 5 companies.
Okay. 5 companies. Okay, cool. Then I think we can do one we can split Collins and Steve. You said Collins and Steve are from the same company, right?
Yeah.
Okay, cool. Can we split them up? So let's have 3 rooms.